This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Page 111, the influence of accounting as a profession in the context of an organisation. Accountancy firms are closely involved with their clients either through their role as auditors or in the provision of other services. Can't happen in America. Can it? It can? No, it can't. No. Who says not?
Only taxation.
Only taxation, but who says it can't? What's the piece of American legislation? What do you wear between your feet and your shoe? So you don't wear Sarbanes-Oxley Act between your feet and your shoe. You wear socks.
That was next question.
Yeah.
For some countries in Europe it's the same. For France.
In bits and pieces of Europe, yeah, but France is, it's sort of the fringe of Europe, isn't it? They're as close to America as you could get. They're almost American, the French. There's only Ireland is closer. Really, but you're allowed to, I presume. You big four firms, are you allowed to provide other services to your clients other than tax? Can you be internal audit? Can you provide an internal audit function to your external audit clients? You can't.
Internal audit.
Oh, all right. What about consultancy work? Or employment work? Recruitment work? I don't suppose you do that so much over here. Used to in the UK, some accountancy firms that provided those services. Secretarial work, keeping this company's statutory records up to date. No? Okay. It might be just a matter of demand, supply and demand. If there is no demand for you to provide these other services, then you don't provide them.
And if you want to provide some services other than the audit, we should ask for the authorization.
You should ask for
Authorization of services
the authorization from
our group.
From where? Europe? Oh, from your firm or higher up? From your firm?
Yes.
Ah, all right. So Ilse is talking here as a representative of one of the big four, and apparently if the big four local firm wants to provide other services to audit clients, they need to get the authority from the big four next level up, the area which covers Ilse's office. Okay, auditor's independence could be threatened and could result in the auditor expressing an inappropriate opinion on the truth and fairness of the view shown by the financial statements. It could be independence, could be threatened, but the auditor accountant faces other dilemmas in addition to problems posed by traditional threats. For instance, the client's in financial difficulties. And you know, if the client's in financial difficulties and they're facing going concern problems, do you know it's often the case that an auditor who uses the expression going concern within the financial statements, it's just the mention of the phrase, just the mention of those words, which will actually stop the client from being a going concern, because it rings alarm bells in the minds of suppliers and creditors. It rings alarm bells in the minds of employees if they see the financial statements that said the financial statements have been prepared on a going concern basis, on the basis that the company will be able to refinance its debt. As soon as you start mentioning going concern, the bank starts getting worried. The lenders start getting worried. The employees do. The suppliers do. So it's often, in practice, I think, it's often the case that it's the accountant that pushes, the auditor, that pushes the company over the cliff. In this situation, if it's in financial difficulties, the dilemma facing the auditor is whether to modify the audit report or not. Modification in the form of a qualification. What's the difference between modification and qualification? What's the difference between a modified audit report and a qualified audit report?
Modified, it's what said with some remarks? Or?
Modified what?
It means that there is some remarks?
Yeah. It's an emphasis of matter. If you include an emphasis of matter, or within an audit report, that then means it's a modified report, but it's not qualified, because your emphasis of matter paragraph will say, without qualifying our opinion above, we draw attention to, and then explain what you're emphasizing. So that will be modified, but it's not qualified. Whereas a qualified opinion is where the auditor reserves a clean opinion, says that the accounts are wrong. Now, sometimes they're only wrong in a little bit. There are material misstatements only on one section. Or there's an insufficient, they were unable to obtain sufficient appropriate audit evidence, which is an uncertainty. But it may only be about a little bit of the financial statements. Or it may be pervasive. It may be a big qualification that says the accounts do not show a true and fair view. Or we're not able to express an opinion about whether they show a true and fair view. But all of those four, those are all qualifications. So a qualification is a modification. But a modification is not necessarily a qualification. All right? All elephants are animals. But not all animals are elephants. I don't know if you could get that into your answers. Did you get that into your answers? Uh-huh. A modification in the form of a qualification could well hasten the client's progress to insolvency. Is the bank going to want to continue lending money? Equally, not to modify or qualify could give the wrong message to stakeholders. And when it subsequently does go into liquidation, then the auditors face criticism for failing to modify their audit opinion. Not necessarily just criticism. It could be legal action for negligence. And the precise wording of an audit report is therefore clearly a matter of great care, and it requires tremendous professional skill, experience, expertise. But the auditor's carefully got to consider what is meant by the public interest. And nobody knows. So I would imagine that if you're facing, as an auditor, if you're facing this type of position, you may very well feel it's necessary to take legal advice. Should the auditor provide other services? Well, why not? The audit firm, we already know about the client. We're surely the people best able to advise the client on matters of finance particularly, because we know the client, we have the history, we have the expertise, the professionalism. But there remains the danger of the audit accounting firm becoming too dependent on the client because of fees. From society's point of view, it must be beneficial for the auditor to provide these services because it's less expensive and quicker. And quite clearly, if there's greater expense for the company's not going to stand it. They will pass that expense on to the public. But on the other hand, society also has needs. And it may be the case that society is better served if we have a truly independent other firm of accountants to provide these other services. Client relations. Can you read page 112? I'll give you a minute or two to read page 112. Client relations, size of audit, and the big four. That's page 112. The accountants in society, page 113. Accountancy in society. No doubt, or there is a doubt, in the minds of the public about competences and integrity of accountants, and it's fueled by their high-profile failures. But accountants themselves believe they have a role to play, and as being able to serve the public interest, they have the skills, we have the knowledge, and in fact, if we don't have neither the skill nor the knowledge, then we shouldn't accept the task, we shouldn't accept the work. Generally, we see our role as well established. The profession's been in existence for over 100 years, but we're slow to change. We're like a supertanker on the sea. When a supertanker puts the brakes on and tries to stop, it takes it 11.2 kilometers to stop. So a supertanker travelling at speed in the sea, if it decides to stop suddenly, it's 11.2 kilometres before it reaches a finish. Did you read about the man in Switzerland who was travelling in his car at 186 miles an hour. 186 miles an hour. That's about 298 kilometres an hour. And he was going so, that's a kilometre in 12 seconds, I think, something like. And he was going so fast that the speed cameras couldn't take a picture of him, because they're limited to 125 miles an hour instead of 186. But one of the more advanced speed cameras got a picture of him. And the police were able to stop him. I don't know how, they must have had a helicopter. But they stopped him, and when they initially told him to stop, it took a full kilometre, to come to a stop. Amazing. How did I get there? How did I get to that? Role of accountants in society. Well, the profession is slow to change. That's what I was saying. The profession is slow to change. A ship takes 11 kilometres to stop, and this man took 1 kilometre in his car. Not normally a lot of time for accountants to consider innovation. Well, there isn't, is there? Ask all and any of these representatives of the Big Four. They just don't have time to think about innovation. Their workload is already sufficient for them to wonder whether they're going to be able to get to sleep at night.
I read in a magazine recently that the average age for accountants in the UK is 65.
The average age for accountants in the UK is 65.
Or about 60, no, I don't remember exactly. Can it really be so? That the average age is so old?
Well, it keeps saying it's an old profession. Some of them are 115 years old, so... can it really be so that the average age for accountants in the UK is 65? I really have no idea. But I'm quite pleased you told me, because it makes me feel quite young. Well, no, I can't believe it. It can't surely be true.
I can't either believe.
No, it can't be true. That means there are people who are qualifying at the age of 22 and 23. That means that there must be others who are 105 or 106 to get to an average. No, it can't be so. It must be a misprint. It probably means 25 or 35 maybe. Where did you read that?
It was some time ago where some specialist from UK or someone was telling me about reputation of accountants, and accountants are getting older and older.
Maybe older in terms of experience rather than in physical age. Maybe old that way. It can't be true. I'm not accepting that. So how do accountants become involved in change? It's that the fourth point says we're too busy to even think about innovation. Well, you've got 5 bullets there. Changes in the design and management of information systems often require the involvement of accountants, because we know the financial side of what's involved. Change involving some financial aspect again presents the accountant with an opportunity to use their specialist skills. Any new entity, company, initiative will likely be profit related. So again, we're going to be involved with the numbers. We're the people best able to push the buttons on the calculators. Working in the public interest means that accountants need to design rules, called IFRS, to deal with doubtful practices which entities indulge in. Examples would be contingencies, provisions, financial instruments, share-based payment schemes. One of the things that accountants do is that they reduce the penumbral areas of divergent possibilities, don't they? Is that not what we do? Is that not a role of IFRS? Is to find my magic pen. One of the things that we do is we reduce the penumbral areas. Of divergent possibilities. That's a role of IFRS, and IFRS is primarily designed by accountants for accountants. And the roles of the IFRS is to reduce these penumbral areas. And then on page 113, one other area in which the accountant could well be involved is in the preparation or review of the Corporate and Social Responsibility Report. Another area is that surely there must be some accountants in the Department of Finance and the Treasury, the government's financial department. There must be some accountants in there assisting the Chancellor of the Exchequer or the Minister of Finance. So we are ourselves movers and shapers in society. Page 114. Role of accountancy is a value-laden profession capable of influencing the distribution of wealth and power. This is where we come in with our tax. We saw the start, the subheading, the role of accountancy. The question is, how can accountancy influence the distribution of wealth and power? It may be achieved in a number of ways. We've got 4 bullet points there. Giving advice to government about the content and wording of successive acts which could have an effect on the interests of creditors and employees. Advising on how more fairly to spread the tax burden. Ensuring that clients comply with legislation such as the full disclosure of remuneration. And this way directors may be less inclined to pay themselves outrageous bonuses. And whistleblowing on the illegal actions of entity officials. If we, as accountants, if we discover and are satisfied that we're right, that any of our clients is guilty of obtaining proceeds as a result of crime, then we have a statutory duty to disclose it. So we are able to influence society because for the benefit of society and in the public interest, we have to disclose where we know that entity officials are committing illegal acts. Page 115, it's almost inconceivable that an accountant would knowingly act against the public interest. But there are situations where if we do nothing, then that's the equivalent of assisting a client. Simply inactivity or non-action is the equivalent of helping, collaborating, cooperating. This following section provides some examples where disclosure or lack of it may be seen as being acting against the public interest. Lack of disclosure, the situation where lack of disclosure would decrease accountability or limit the decision-making of the public. That's where not enough information is provided on illegal actions. So it would allow those actions to continue to the long-term detriment of the stakeholders. Where lack of disclosure would lead to a lack of enforcement of appropriate law, it would be against the public interest not to disclose the information, because the appropriate law is being allowed to be broken and to be continued to be allowed to be broken. Lack of disclosure would mean a criminal could continue the crime, such as money laundering, in breach of regulation. This next one, the third one, is disclosure would adversely affect the economic interests of the jurisdiction. If we do make disclosure, we're going to damage the nation. For instance, disclosing price-sensitive information on an entity's share price or details of interest rate movements before they have been authorized could harm businesses in the jurisdiction, or it could harm the jurisdiction as a whole, if it's the exchange rate movement one. Disclosure would be inappropriate because public interest would be damaged. Lack of disclosure would impair health and safety. Not disclosing information on potential contamination of land. Non-disclosure of the information would not be in the public interest. Non-disclosure would not be in the public interest. Disclosure then would be in the public interest. So you've got some examples there.